Hey everyone, welcome to September. We have a lot to go over on the mortgage side. Craig, why don't you jump in on what's going on?
Let's talk a little bit about the market. So just some stats, active listings in MLS, we're at 21,849. That's up from last month, just about 1,000 homes. So seasonally, I think that's about normal, right?
Mm-hmm.
We're in September, Labor Day's over. Also with interest rates coming down like they have, sellers are now seeing that they could sell and now buy something or want to buy something because the lower interest rates are coming into play.
Yeah, we've talked about it for a year.
Right.
All of the pent up demand, not only on the buy side, but also people wanting to sell and move up and get into a home that they feel comfortable with.
Exactly. So I think that's what we're seeing, some of this market, and plus just seasonal as well. Active sales per month, we are at 5,644. It's a little lower than last month at 6,088. But again, that could be seasonal as well. That would have been contracts entered into in August. August is pretty slow. So I think we'll see a lot more contracts coming to sale and closing next month.
Generally, end of September into October is when we start to see, especially in Arizona, a lot of people coming in from out of state into their second homes, wanting to buy real estate. So
exactly.
I think stuff will start to get moving.
I agree. So, overall, the market's sort of just staying steady as it's been all summer, kind of flat, no real big movements, no drop-off, just sort of a flat market. Inventory-wise, we're about 3.4 months of inventory. That's a little more than we had over the summer. But again, we're seeing more listings come on because sellers are wanting to sell. And so I think that's increased our month supply of inventory a little bit. Yeah. But that's still in a seller's market territory for sure. So that's kind of the overall big picture of the market. It is busy out there. More people are, open house activity is quite busy. And we're seeing a lot more people out looking.
It's good.
Yeah. Tell us about the mortgage industry. What's going on?
Yeah, so there's a lot of changes, I would say, on the forefront from a mortgage rate perspective. Obviously, since the highs last year in November nearing 8%, we've come down and we're now closer to 6%. So we've seen the substantial drop that we've been talking about. Overall, today's Monday, the 16th. The Fed meets on Wednesday, and there's a 100% chance of a rate cut. We were just talking offline a little bit about this. The market's been pricing in that rate cut, but what's changed over the last week is interesting to kind of monitor and look at. Is there's now a 60% chance, or a little bit over a 60% chance, according to the CME group, of a 50 basis point rate cut versus a 25 basis point rate cut. Last week, those numbers were almost flip-flopped and more so towards the 25 basis point rate cut. So that's probably going to stir up the market a bit. Where that goes, I don't necessarily know.
When you read the analysis as to why 50%, what's the driving reason?
Jobs. So I think it's stabilizing jobs. They've seen that inflation has stabilized and is coming down. Their two main components of this is the job sector and then inflation. They feel like they've gotten inflation more under control, and we're starting to see some cracks in the jobs. Jobs reports aren't coming in as strong. Unemployment it did go down this last month, but it's still higher than what they were anticipating. So when you see that crack in the foundation of jobs, the only way to really mitigate that risk is to lower rates. Possibly even further. So 50 basis point cut potentially coming, and I think that may shock the market a little bit more than anticipated.
I'm sure, because as you said earlier, the mortgage rates have come down considerably. With this anticipation of that 25 basis point reduction. That increasing could really stir it up.
Yeah, it could. And I think going into our selling season, although it is an election year and there's tons of data that backs up, the housing market generally does well during an election year. This could be a huge wave of potential sellers on top, inventory on top of buyers. First-time home buyers really coming back into the market. We've seen them kind of dip their toes into the market and say, I'm going to wait for rates to continue to come down because it's still relatively unaffordable out there. As you're saying, home values aren't going down. No. They're still going up a little bit. So it is still relatively unaffordable, but with this rate change that we've seen over the last month, all signs are pointing towards a lot of first-time home buyers coming into the market.
Nice.
So
anything else?
That's all I got.
Well, stay tuned because Wednesday is going to be a big day. So by the time you see this video, we might already have that answer, where the basis points are.
Yes, exactly.
Yeah, so it'll be interesting to see that. All right.
If you have any questions, give us a shout.
Thank you.